Hey everyone, and welcome back to the channel. Look, if you're over 65, or if you have parents or grandparents managing their retirement, I need you to be honest with me. What is the one thing that keeps you up at night? It's that pile of bills, isn't it? The fixed income is a reality, but those monthly payments feel like a tightening vice. Retirement should be about peace, but anxiety often takes center stage. Today, we're not just reading a list of financial tips. We're pulling back the curtain on a secret financial game. I recently sat down with Elias and Clara, a wonderful couple from the Willow Creek community, and their story is your story. They felt like their savings were bleeding out, simply because they were playing by old rules. They were letting financial inertia and clever corporate strategies rob them blind. We're here to stop that. I'm here to tell you that financial independence in retirement isn't about finding a better investment. It's about being smarter, more skeptical, and incredibly curious about what you're paying for. We're going to expose 6 specific bills, 6 payments, that you, as a senior, should never make after the age of 65. These are the phantom costs, the inertia fees, and the unnecessary drains that keep your savings from lasting. This isn't just theory. This is actionable insight. Get a notebook, because we're turning your budget review into a high-stakes financial treasure hunt. We're going to dive right into the heart of the matter and start with the biggest, most sacred cow of all, the one payment you think you absolutely cannot touch. So let's get into the first bill you absolutely must stop paying, and I promise, the relief you feel from this one step alone is going to be monumental. All right, let's start with the one that causes the most stress. That heavy property tax bill that lands every quarter. You paid in full, right? Because, like Elias, you think it's non-negotiable, the absolute cost of keeping the roof over your head. I'm here to tell you that this is the first bill you should never pay in full after 65. This is the property tax trap. Here's the secret they don't advertise, and this is where your curiosity needs to kick in. Most states, cities, and counties offer senior homestead exemptions or tax freeze programs. These aren't just polite suggestions. They are benefits you have earned through decades of home ownership and community contribution. But here's the key. They rely on you not knowing they exist or assuming you don't qualify. You have to actively file a simple, one-page application to reduce the assessed value of your home for tax purposes. Think about that profound oversight. You've been paying the same high rate as a working family with a full income, simply because you didn't check a box on a form that was readily available. Elias felt a huge wave of regret and frustration when he realized he was letting thousands of dollars a year vanish into the town coffers unnecessarily. You must check with your local assessor's office today to reclaim that discount. But wait, the curiosity deepens. Many areas also offer property tax deferral. This is mind-blowing. You stop paying the tax entirely right now. The accumulated amount is simply settled out of the home's equity when it's eventually sold or transferred. The accumulated amount is simply settled out of the home's equity when it's eventually sold or transferred. This is a cash flow miracle designed specifically to keep your savings liquid and working for you right when you need it most. So, your first mission is clear. Stop settling for the full, non-discounted tax bill. Go online, call your county, and find that senior exemption application. Reclaim the money that's rightfully yours and ease the biggest financial stressor in your fixed income. Now, let's talk about the bill that sneaks up on you, the giant cable and internet fee. If you're paying $150, $180, or more every single month for a bundle you signed up for years ago, you're the victim of the phantom entertainment fee. I want you to be totally honest with yourself. How many of those 300 channels do you actually watch? 5? 10? You are paying for redundancy, habit, and hundreds of channels of content you actively ignore. The cable companies are banking on your inertia. They know the hassle of calling to downgrade or cutting the cord is enough to keep your massive payment locked in year after year. Here is the secret. Seniors should never pay for an oversized entertainment bundle. This is the lowest hanging fruit for savings. You need to do 2 simple things, like Clara and Elias did. First, cut the cord. Switch to a basic, high-speed internet-only plan. Second, go a la carte. Subscribe only to the 2 or 3 streaming services that you actually enjoy: Netflix, Hulu, Prime, whatever your favorites are. The financial curiosity here is incredible. By separating the services and only paying for what you value, Elias and Clara instantly found a $100 plus savings every month. That's a minimum of $1,200 back in your savings annually, simply by being ruthless about your entertainment consumption. Stop paying for a massive cable package you signed up for in the 90s. Your viewing habits have changed, your needs have changed, and your retirement budget demands that your bill changes too. Cancel the ghost channels and enjoy the savings. Let's shift to the garage. We need to talk about your auto insurance. If you're driving a 10-year-old car that's fully paid off, it's reliable. It gets you where you need to go, but it's not a high-value asset, and you're still paying for full collision and comprehensive coverage. You are absolutely caught in the overinsured trap. This requires a moment of financial curiosity. Find your car's actual cash value, ACV, what a dealer would pay you for it, which might be around $5,000. Now, look at the cost of your annual premium for just the collision and comprehensive coverage. It often hovers around $800 to $1,000, and your deductible might be $500. You are spending up to $1,000 a year to protect a possible $4,500 difference. The math is simple and brutal. In just 5 years, you will have paid the insurance company more in premium than the car is even worth. Seniors should never pay for full collision and comprehensive coverage on a low value. Fully paid off car after 65. You need liability, of course, but the financial risk of replacing the car out of pocket is far less than the guaranteed loss of paying those high premiums year after year. Retirement is about managing cash flow, not insuring against every tiny contingency. Let your emergency fund be your safety net now, not the insurance company. Be bold, be curious, and call your agent today to downgrade to liability only. Reclaim that $800 plus a year that is simply draining your retirement savings. Now, let's move to a sensitive but crucial topic: the lingering mortgage payment. All residual balance left on your home loan. You're likely craving that paid-in full feeling. But holding on to that small debt is often an unnecessary interest drain that actively shrinks your overall wealth. I want you to engage your financial curiosity right now. Look at your statements. If your savings account is earning, say, 1% interest, but your residual mortgage is charging you 4% interest, you're losing money every single month. Your cash is essentially working against you because the interest you're paying on the debt is far higher than the interest you're earning in the bank. This is the opportunity cost trap. The solution is to eliminate the monthly payment, and often the math points to 2 simple paths. The first is a lump sum payoff from your savings. By paying off that small remaining balance immediately, you generate a guaranteed return, the interest you save, that is far superior to any interest your bank account is providing. The second path for those who need to protect liquidity is the strategic reverse mortgage. Forget the old stigma, used responsibly by seniors with significant equity. It eliminates that monthly mortgage payment immediately and provides crucial cash flow relief. Seniors should never pay residual mortgage interest/fees after 65, when the priority is preserving maximum monthly cash flow. Don't let a small monthly anchor weigh down your entire retirement budget. The ultimate goal here is to shift your focus from debt repayment to cash flow preservation. Freeing up that monthly payment is one of the biggest psychological and financial boosts you can give your retirement. Let's enter the maze of medical expenses. You have Medicare, so you're covered, right? Not entirely. This is the habitual medical overpayment, and it's arguably the most complex and expensive trap. Here is the financial secret. You should never pay full price for prescriptions and high copays without first optimizing your Medicare Part D plan. Part D plans, your prescription coverage, change their approved drug lists, their formulary, and their pricing tiers every single year. Elias was paying a hefty $70 copay for a common drug. But a quick online review showed a rival plan offering the exact same drug for a $10 copay. He was paying a penalty for simply not checking his mail. Your annual open enrollment period is not just a suggestion, it's a mandatory financial audit. If you don't reshop your Part D plan based on the drugs you actually take, you're almost certainly paying hundreds, if not thousands, too much. Now, for the deeper curiosity, the federal Extra Help Low-Income Subsidy Program. If your income is modest, this program can virtually eliminate your Part D premium deductibles and greatly reduce copays. The income and asset limits are higher than most people think. Don't be too proud to check. Be proactive about your healthcare costs. Treat your Part D like a service you must reshop every year to ensure your copays are as low as possible. And finally, the little bills that bleed you dry, the inertia fee. We're talking about the small, recurring charges for the gym membership you haven't used since your knee surgery, the forgotten travel club membership, or the premium antivirus software that's now redundant because it's built into your computer. These small, perpetual club and subscription fees are the silent, constant drip, drip, drip that steals your savings. They're designed to be small enough that you tell yourself, I'll deal with it later, but they add up to hundreds of wasted dollars annually. They're commitments you made to a younger you that the older you is now funding unnecessarily. The curiosity here is powerful. Why am I still paying for a person I no longer am? Seniors should never pay for unused perpetual club or subscription fees after 65 because your life has changed, your interests have shifted, and your energy is better spent on things you actually enjoy. Your homework for today. This is the most actionable step. Pull out your credit card and bank statements for the last 3 months. Circle every recurring charge, no matter how small. Then ask yourself this single, ruthless question. Does this charge serve the life I live today? If the answer is no, call and cancel. You are simply closing the door on unnecessary financial drain and putting that money back where it belongs, in your pocket. So there you have it. 6 financial drains that are holding back your retirement freedom, exposed and ready to be eliminated. Elias and Clara left that kitchen table with immense relief, not just because of the money they saved, but because they felt in control again. They stopped letting inertia be the thief of their golden years. Your savings are precious, and you worked decades to build them. Now is the time to be the most curious, the most proactive, and the most ruthless you've ever been with your budget. Remember these 6 areas. The full property tax, file for the senior exemption. The oversized cable bundle, go internet only, a la carte. Full coverage on old cars, downgrade to liability. The residual mortgage interest, eliminate the monthly debt. High prescription copays, optimize Medicare Part D/seek extra help. And use subscription fees, audit and cancel recurring charges. If this video helped you feel more in control, please hit that like button and share it with someone you love. Let's help every senior protect their savings. What bill are you tackling first? Let me know in the comments below. We'll see you in the next video. Thanks for watching. Hit the bell icon for the daily updates. Please do like, subscribe, and share with your friends.